GetCrack. Wake up, motherfucker.
All right, what's up, guys? All right, let's see how we're gonna do this today. Well, what I gotta cover? I gotta cover some Chinese stocks today for you. That's one thing. Um, but before we get, let's just look. Well, the AXTI. That's where I would like look for the bottoms to buy, and we did hit a low today, so it opened up down, Bloom Energy and AXTI, but they ended up on the green. Same thing with a lot of the neo cloud type stocks like NBIS, Core Z, CIFR. Actually, tomorrow, HUT and I think CIFR will have earnings in the morning. Palantir had earnings after the close, and last I checked, it was up 12%. So software will continue on moving up. So that's another thing we'll have to look at throughout the week. Okay, and tomorrow I think we have ARM. Oh, I mean AMD. AMD after the close tomorrow. After the close, AMD and who else? Somebody else was important. I forgot. I'll have to put up the images of the. Let's see, SpaceX. Okay, yeah, I know that. Astra Labs, Zeta. Okay, Arista Networks. Yeah, those will probably be also important. All right. Yeah, tomorrow will be that. But most of the earnings for last week are done. That's most of the S&P 500 in the past 3 weeks. So we should be fine for now. I think all we have to do is get past this wall. Okay, this wall. So I'm going to play a video shortly. First, man, I got to get this thing loaded up. Come on, hurry up, hurry up, hurry up. Jeebus. Hmm. Do. Okay, come on, come on, come on, come on, come on. Okay, all right. I think that's fine. I'll look at the weekly. All right. That should be good enough. Okay. All right. Let's get to it here. All right, here we are. So we got the DeMark here on weekly. You see the 13 that was on the combo. We have a sell risk level at 726, and it looks like this is now a solid line. Once it becomes a solid line, then we are ready to rock. We will continue on up. However, there is something else in the way. So the previous top in around May 31st was 760.40 cents. All right, 760 and some change. That was the previous high. And when I play the video on the option stuff, you will see that there is a level around 760 that will block things from moving forward. So if we want to get through 760, the options are in the way. Options are in the way of us getting to a higher level. All right. And what is the target for that higher level? Well, in the title of today's stream, I say it's around 840. Okay, 840. Why do I say 840? For the SPY, which is equivalent to 8,400 for the S&P 500? Well, because that is the count for the DeMark going up on the D wave at 841 and 43 cents. That is the next target. So if we can get through all these options that is blocking our way, today could be the minor top. Okay, after today, we could be going down tomorrow. We could be going down tomorrow. I mean, the options guys are pretty much thinking that after today, it's going to be very hard to get any further and we will start dropping again. But if by some miracle we do get through this call wall, then everybody will be rushing back in. Everyone's going to be rushing back in. They're going to start chasing this stuff back up. And you'll see 840 as the next target for late August into September, probably Labor Day. So I think the top will be sometime around Labor Day if we somehow manage to get through these options. All right, we have options today. We have options on the stupid for the quarterly expiry, which is like in 3 weeks on a Friday, right? We have the VIX futures expiration on Wednesday, the third Wednesday of the month. So yeah, we got a lot of problems ahead if we can't get through them. So those are what's getting in the way of going up higher. If somehow we manage to get through all those obstacles, then 840 shall be the next target. So you can see here on the daily, we have 1, 2, 3 counts already going up on the daily, as well as the weekly. If you look back at the weekly, we have 1, 2, 1, 2, right? At least 1, 2. I think I saw a third one, right, on the SPY. So yeah, 1, 2, 3 on the weekly. So it looks like we are on our way up. If somehow we manage to break through everything, that's the next target. All right. So that's where you were looking to sell sometime before Jewish New Year's on September 11th. So get out of the game by the time we get to Jewish New Year's, September 11th, into Yom Kippur, September 21st. And if you're ready to buy back, okay, if you missed out on this dip, which wasn't much of a dip, I suppose, if you weren't looking at AI stocks or semiconductors, then the next dip will be starting around Sukkot. So that's another Jewish holiday you should look at. Sukkot. Start looking for a bottom starting from Sukkot into Halloween. All right. So sometime there, Halloween, which will be the end of October. So most of the fiscal calendar for most of these investment banks will start reorganizing their portfolios starting at the end of September going into October. So they are rebalancing themselves for the next year. They're already preparing for the next year by the time we hit September. Then they take their day off for the weekend, winter holidays. All right, minor top in the Greek sense. Yeah, in the Greek sense. That's it. Okay. That's all I want to say about that. So I'm going to look at these ETFs for you. So we have our original leverage ETFs. Remember, I told you guys back in late March to buy AIBU and WebL. Okay, these two. Well, it looks like since last week, if we actually got a bottom and we're not going to go any further down, look to buy these two ETFs again. WebL, which was up 9% today. AIBU up 7% today. So it looks like we're starting off the week good. So if the option guys are correct and we are start going back down tomorrow, look for an entry to buy. So if you missed out on the lows last week, then you will have another chance starting tomorrow. That's where I'll be looking to buy. Okay, so if you want to do leverage, you missed out on that trade, then that's where you want to be looking at. So those two will be the ones to go leverage on. Now, you would ask me, well, what about semiconductors? Why don't I just go leverage semiconductors again? Well, I think software is going to take over mostly. Software is going to take over. Look at today's performance on semiconductors, SOXL, 1.73% leverage. I think software is going to take over. Okay, that's what we did last night. That's why I showed you guys last night. I showed you the cycles, right? I showed you the weekly cycles. The semiconductor trade, which started last April of last year during the tariffs, I think is over. It's pretty much over. We will make a new high, probably with semiconductors, but it's not going to be a significant high. It'll be a minor high. It'll be a high that's not much further than the last previous top. around May to June, and that will be it. Software will continue on up, meaning that the next time we move down in September, going to October, I think software will outperform, meaning that semiconductors will go down lower than software. And what you'll see is that relative performance wise, software will outperform semiconductors compared to the S&P 500. If I see that, if I see that type of action happening, then I'm going to be a lot more confident that next year will be the year of software. It will not be the year of semiconductors. You already had your chance to get into semiconductors. That was last year. Last year was it. If you didn't play semiconductors from last year, I don't understand why you want to play them significantly. I'm not saying to avoid them, but I'm just saying that you're going to have to be very selective. Like there'll probably be a few semiconductor stocks that will continue to do well, but it's not going to be the whole group. And if the whole group doesn't perform together, then you don't have that juice. When they move up together, it's very easy to push higher because the tide is rising. It lifts all the boats. If the tide is no longer rising for semiconductor boats, it's rising for the other guys, then it's better. You're better off going into trash like Adobe. Even if Adobe is trash, it's going to outperform over time compared to semiconductors because the tide is going over to the other side of planet Earth. If you believe in flat Earth, then ignore what I said. If you believe the Earth is round, then only a certain portion of the planet, will have gravitational pull from the combination of the sun alignment with the moon. All right. So there you are with that analogy. That's an analogy you can think of. So if you want to play this game, if you want to do better than the S&P 500, to where the hockey puck has already been. The hockey puck has already been in semiconductors. Why do you keep going to semiconductors? You had your chance playing it. It's over. It's time to go back to oil, gas, software, China stocks probably. Yeah, Kingsoft is still my favorite. Kingsoft went up like 9% today, right? That's yeah, I think that's where it is. Barbell investment strategy. Yeah, I know about barbell. I've heard of that before. Barbell and pair trading, barbell. Um, they're not exactly the same concept, but it's rooted in the same idea where you short one thing and you long another. That that Aschenbrenner guy tried to do that, right? He shorted Adobe at the same time he longed Bloom Energy and Intel because he was like, oh, well, this is what I should do. I should short the loser at the same time I long the winner to magnify my results. Well, that doesn't work when you didn't time it correctly. If you didn't get out of the pair trade, then you get screwed up. Barbell is different. I believe barbell. Let me see. Let me remind myself. I'll have to look this up. Uh, Barbell. This is definitely something a boomers do with their portfolio strategy. I don't have much of an opinion. Me. I'm kind of like a market timer. I like to put all my money into something that I know is going to do something instead of like um, diversifying between two different things. So barbell is kind of like that, right? Let's see. Barbell strategy is an investment approach that balances risk by placing money into two opposite extremes: hyper conservative assets and hyper aggressive bets. Yeah. So if I wanted to do a barbell strategy in today's market, you know what I would do? I would do one portion of my money in oil and gas companies and one portion of my company into AI technology companies, right? That's what I would do. That would be a barbell strategy that you would try to do right now. I guess another way would be to put your money into T-bills, utility stocks, and what else would be good? What else would make sense? Utilities makes a lot of sense to me because it takes advantage of the AI stuff. So utilities has a conservative factor to it, but it also has an AI factor. It also has a dividend, not as aggressive as a REIT, so it can't compete with like a T-bill. Let's mix it up. Let's say a little bit of utilities, a little bit of REITs. Okay, so have those two in there. And I would probably start considering buying long-term treasuries. A 30-year bond right now will give you 5.4%. You can lock in a 5.4% for 30 years. So maybe a little bit of that too. So a little bit of TLT. Yeah, REITs bond. No, gold, no. Gold, I think you can no. Gold, we're not ready for gold yet. So by yesterday's analysis, I see only gold starting to really outperform starting next year in late 2027. So you can trade gold with the miners. So the gold will probably pop a little bit going into October, September, October, but outside of that, it's not going to move anywhere significantly. I think bonds will outperform gold at that same moment. So yeah, the bonds right now are very cheap and they have high interest. So I think you can either directly buy bonds, get that 5 point whatever percent, or you could buy the ETF TLT, or you could buy leverage ETF. Let me look at the leverage ETF right now. So let's see. TNA, I think, is the leverage ETF for the TLT. TNA. So this is 3x leverage. Let's see. Is that correct? No, that's a small cap. So let me see. TMF. Maybe it was TMF. TMF. Okay, that's right. Let's see where we're at. This should be very low. Yeah, this is TMF. We could see right here we have a C5, 13 count already given here. We're about to do another 13 count in a couple weeks. So yeah, so we got this 9, 1, 2, 3, 13. All right. Well, this looks fairly good. TMF. So maybe I'll just buy some TMF. So if you want to do a barbell strategy, I would be like TMF and some oil stuff, right? Maybe some UwU Gush or something like that. In addition to the other stocks that is scrolling underneath here, because PBF went down today, so start looking for a place to buy. PBF, PRR, DINO, VLO, MPC, PSX. There you go. So you can have a combination of that, and then you have the REITs. The REITs are the stocks that I showed you on that list. I'm gonna have to look back at that too to see which one I want to add to the boomer portfolio. The little REITs there. So yeah, TMF looks good. Try to pick some XLU stocks. So let's see, which were the good XLU stocks I wanted to look at, the utility stocks. I said NEE, Next Energy. That one looks good. So let's see here. So let's see if it goes down in the coming weeks. Maybe buy some utility stocks, NEE. I believe they're going to buy out Dominion Energy. That was another one that's good. I think it was DE. I don't know. Maybe it was just D. Yeah, D right there. Let's see how this one's doing. Dominion Energy and maybe some railroad stocks. We were looking at some railroad stocks too. Why not? So let's see if this one comes back down. Let's look at some railroad stocks. UNP and CSX. How about that? There you go. That's your barbell right now. buy software, and then the other half of your money you can buy this. Let's see if it goes back some more, okay, this week. So UNP CSX, there you go. So a couple REITs, a couple railroads, a couple utilities, some leverage bonds right there. There you go. That's your barbell. How about that? I don't know. I don't personally use it. I feel like if I'm purposely trying to find something that does that, I don't know. How much does it outperform most strategies? What's the quantitative analysis on that? I'm sure there's a bunch of people that have done this. Centennial Energy was a good name a few years ago. Lots of nuclear. Yep, AXTI is pumping. Very good. Correct. Centennial Energy. Let's see. I never heard of that one. Yeah, AXTI. Yep. AXTI. That's why I said, like at the beginning of the show, I said AXTI, Bloom Energy. Those two, I think, are the ones you should trade if you want to trade. But like I said of the show, we might have problems with the options market. The options market might be getting in the way of things tomorrow. So I don't know. Centennial, I definitely like some nuclear. Okay. Definitely. I think CEG used to be good for that. I think they work on the what was it, 3 Mile Island? Was it CEG? Man, I forgot. CEG. Yeah, Constellation Energy. So it's this one. So I don't know, did you confuse Centennial with Constellation, or is Centennial another one that I should be looking at? But yeah, CEG used to be something to get in. It's been going sideways, pretty boring, nothing to talk about. Will it finally break out? I don't know. That's another utility stock to look at. But utility stocks, I only like NEE, Next Energy, and Dominion. And now they're going to merge together, apparently. And same thing with the railroads. UNP is going to merge with NSC, Norfolk Southern or whatever, NSC. So those railroads, a lot of these railroads are now monopolies. So it's probably good time to get into them if the freight lines are getting too much. So, all right, those are what we're going to look at. So now I'm going to play the video with the option stuff. So let's see what you think. Do you think we are going to crash tomorrow? Was this a local top? You decide. I'll let you decide. Oh, come on. Where is it? I thought I downloaded it. What the hell? Okay. Get out of here. Go over here. All right.
Today, the market's approaching all-time highs, but something under the surface looks different. If you look at the positions that dealers are hedging today in the market, you'll see something often called a call wall. Here's what makes today different, how to spot it yourself, and what it might mean for today's price action. If you don't know what a call wall is, here is your explaining. A call wall is a position built when customers sell calls to market. Now, gamma in and of itself is not bullish or bearish, but there's something that happens when positions cluster in a certain range. Now, in this case, we have a position where market makers get longer and longer positions, as spot rallies. As we get closer and closer to those positions, their gamma grows in the overall book. And this asymmetry comes from something we call speed. Speed, or D gamma D spot, is just a fancy way of saying when the market goes higher, the gamma in the position gets larger. And so what you wind up seeing is a situation where for every next dollar the market rallies, a market maker hedging his book would have to sell an increasing amount of futures. On today's position, a rally of less than 1% more than doubled the market maker's gamma exposure in the book, which means for every next dollar, they're selling more and more futures. And because of that absorption, you wind up seeing the chart sometimes flatten out and have a really difficult time getting through key levels in the position. And here's how you see it for yourself in VS3D. This is the well, nothing is financial advice. So for me, again, it's about exiting positions, but it's also about selling options at my target. And then if I'm using options, these targets where the market maker book is very long gamma are exactly the places where I'm setting my short options in my structures. Because the whole point is that I believe there's a liquidity condition here that makes it very difficult to move. So in those conditions, I like to be short options locally. This is confusing. This is why we have VS Pro. And so if trade ideation and strategy is interesting to you, then I would encourage you to check out VS Pro, where we go beyond the data. In fact, a key takeaway from today's VS Pro commentary showed the importance of understanding your customer base, because not all customers are the same. So while generally it's true that these call walls are very difficult to break through, it is not always true. Critically, the customer that sells this giant block of call spreads to market makers with one day to expiration, when the market rallies to within 30 points of their strikes, our data shows they buy them back. And when they do, it's like breaking through the call wall all at once, because all of those futures that market makers have sold against that position on the way up are suddenly bought back at once when the customer rolls their trade.
All right, so this call wall is what's getting in the way. Now, I don't know if you got to pay money to know that. You can get it free, you know that. You can go to like a bar chart or something. So let me show you a bar chart. So you can go to bar chart. Bar chart SPX. Let's see. Yeah, you can go over here and get this information. All right, I'll load this up. Okay. So let's see. All right, loading this sucker up. So you can go to barchart.com and you can look up gamma exposure. Okay. And here we are. You can see you can get it for free here. You can go over here and click call wall and put wall. So yeah, you can see whatever it is here. But if you see this large blue line going up, this histogram, that's your wall. That's where things are not going to be easy to get across. So if you can get above 7,600, all right, then the next time we're going to hit some walls here are over here, over here, over here. Yeah, you see some blue things. So I guess that's your call wall. But again, you can get it for free. So you don't need to pay $300, $500 a month to see that. Now, whether or not you can see other things that this thing doesn't show you, I don't know. That's up to you. That's really up to you. I'm sure they have better detailed information. So here again, I put it for the SPY ETF, where a lot of options are played. The XPX is index level, so that's where you will get your index level options. But for most people, they'll buy options in SPY. So you see the put wall and the call wall. Call wall at 760, which aligns with where the SPX is stuck at right now. And if you can see, most of the blue line here is around this level at 758. So this is where your resistance is. Now, of course, you don't need to do this at all. You could just go look at a chart and go, hey, when was the last time the SPY was this high? The last time it was this high was late May into early June, before we had that first shocking crash. And we're about to get to that resistance level. So the chart will tell you that anyway. So there's nothing new here. We know it's going to have a hard time getting above 7,600 just by looking at a chart. Now let's look at the QQQ, the NASDAQ. What does it tell you? What does it tell you? How does this thing look? Okay, we are above the gamma flip line. That's positive. We are now here at 700 on the QQQ, and I guess this is a large blue level. So all the indices right now are at their call walls. So we're going to have a hard time moving up at the index level. I assume you can probably let's see. So Intel right here. All right, let's see what we got. Oh, blah blah. Intel. Intel gamma flip line at 90.69. So $90 and 69 cents. Last price is 91. We are above that level. I guess its call wall is around 110. I guess that's where we're going to have problems on Intel. How about SMH? SMH. Let's look at one of the ETFs for semiconductors. So yeah, you can see what we're doing here. You go to barchart.com. You can find all this stuff for free. You don't need to pay anything for this. This one's still below the gamma flip line. It's still in negative territory. So it's easy for this thing to crash again. So if we are going to have a problem tomorrow, I'm guessing the semiconductors are going to be the ones that will cause it, right? Let's look at IGV. Let's look at software. IGV, where its call wall is at. Looks like the next one will be at 100 for IGV. We are just above the gamma flip line at 97 and 42 cents. Yeah, we're still in the danger zone. So at any point tomorrow, if this thing goes back down, yeah, we could easily crash and burn pretty easily. Yeah, yep. So based on this options information, there you go. Again, everything is here for free. This stuff is for free. I don't know if you want to pay the $300, $400, $500 a month. You're gonna have to see how much value that gives you. It's up to you and how much time you can put effort into learning it into more detail. Me, I have a basic knowledge, right? I have very little knowledge. All I know about is, oh, gamma flip line. Oh, okay. And I have the call wall and put wall. Okay, I see that. You see, I can put in put wall at 90, call wall at a 100. Wow, amazing. There you go. That's the extent of my knowledge. If you're gonna ask me about delta hedging and Vanna flows and what Vomageddon. No, sorry, I don't know crap about that. Good luck. You're gonna have to ask somebody else. So that's to the extent that I want to know about these things. I don't want to know anything else. All right. Okay. Good. That's a little bit of homework right there for you with that stuff. Now, anything else? Anything else to cover? Let's get to another video here. Which one should I look at? Let's see. I have some videos, right? And this S&P market analog. Okay, let's look at this short one. Okay, so I gotta like, I had to open it up another studio because like the thing wouldn't play, and I was like, "What the fuck is going on here?" Okay, hold on. Let's see if this.
Looking at what we've experienced here on the way down, same type of situation, like macro situation with this Iran war. And what do we see? All of this, and then finally the best bar. So you could just wait for this. You could be active on the day. You could be intraday trading into the close. You could be establishing your swing positions and then open more here during the testing period when you see that the tests are happening higher and stronger as a confirmation that we might continue going up. But anything before that could be problematic, challenging.
Oh, tell me much. Let's see what another video we got here. Let's see what got here. That didn't tell me much. Okay, let me see. I got a whole bunch of videos to play, that leftover videos. Let's see what this one is. I have this one to play. How about this one? What's this one?
I just think in high interest rate environments with the 10-year specifically and the 30-year looking so bullish, that's just not an ideal area for growth stocks. Now on the 10-year, kind of what I hope is a setup similar to what semiconductors did when they topped, where you left this doji up there like a little island reversal, maybe where you test the top of that and then we start to roll over. And maybe on this 30-year, even though this looks pretty bullish with higher highs or higher lows, we're coming into some resistance to the left and maybe we can get some relief in yields. But I think that's a very important part to the market, right? You're not going to have high valuations in stocks or a lot of movement in the stock market with interest rates really high. I was relieved today. I know the dissenters called for 2 rate cuts this year and a quarter point, but I was relieved that they didn't raise rates, because can you imagine if they would have raised a quarter point today? That would have been
it's interesting to see that. So we are testing this resistance, and in my experience, generally I pay attention to interest rates, the yield chart, only when we are breaking a resistance level. So this is the way I look at these charts. Everything between here and here is not really important for me. But when we break a specific resistance level, that's the moment where investors are waking up. So for me, that resistance level on 30-year is extremely important. We want to see a rejection after this week. And so we are still discounting the news. We are still discounting today's Fed meeting, but I don't want to see this price action finally having a breakout, a confirmed breakout about this resistance bill. By the way, we have this divergence between the 2-year and the 30-year, and there is someone that is benefiting from this. And let me show the next chart. So it's interesting to see, Bill, that financial are trying to outperform. There's definitely a rising relative trend here. Even PayPal, which has been in a downtrend for a long time, is outperforming here.
Oh yeah, again the credit card companies. Yeah, sure. All right. I mean, that's nothing new. I guess they were implying that because the 2-year and the 30-year wasn't rising at the same slope, that the banks can make money. You have to remember that the banks make money when there's a differential between the shorter term rates and the longer term rates. So when everything is flat, banks, credit cards companies, loan lenders, they don't make money. They really make very little money, if any money. If there's a difference if there's a spread between short-term and longer-term rates, then they start making more money. That's how they do business. They get loans themselves at a lower rate while charging you at a higher rate, right? So even during COVID, when the rates were effectively 0.25%, essentially zero, where did credit card rates go down to? Credit card rates didn't go to zero. It didn't even go to 1%, not even 2%. They still charge people, even with good credit, what was it, 9%, 7, 9%. That's how they make money. They get a loan from the Federal Reserve at nearly zero, and they charge you 9%. So the difference between those two rates is their profit. So, okay, I guess that's an explanation for why we see some of these bank stocks do very well in the past several months, because the rate of change between 2-year and 30-year is different. All right, okay, I guess I could buy that. Does that mean I should buy bank stocks? Well, no, bank stocks are pretty boring. So, I mean, if you want something, you might as well get into REITs, right? REITs is where we are at. Okay, that's done with that video. What other videos we got here? I gotta get through all these videos. I have a whole collection of them. Oh shit. Let's see. Gold. All right. Maybe this is better. What's this one about?
We can have a rally here because I'm looking at the sellings right from the top. So the first change of behavior bar, second leg down, then the third selling in June, right? And then we see shortening of the trust, and now we've stopped, right? And we also have this no supply, like what, 5 days ago. There is that no supply, and then we see how demand is improving on the way up on the two bars. Yeah, right there. Yep. So no supply, and then look at the improvement in demand. Supply comes back in, but less aggressive than we had like on an analog bar, and less result, and we're still holding here, right? So we had supply in today's bar in gold, but yeah, let's see if we can retest those lows. But I feel like it wants to hold. I can see a rally back to 4,400 to retest that swing. That last reaction, yeah, right there.
That still does not excite me.
Yeah, but if you think about it percentage-wise, that could be a 10% move.
10% move, yeah.
It's yeah.
Something like that, yeah. We're definitely not doing anything of this nature.
Oh no, you need a change of behavior, and you need to hold. You need to jump somewhere around 4,800 and.
Yeah. All right. Yeah. You see, yeah, I'm not excited either, man. Come on. It's like all it's gonna do is like, oh yeah, we're gonna go up a little while, and then we're just gonna make another new low. We're just gonna go back down and go to like 3,500 or something. So, okay, to me, gold, Bitcoin, all this stuff, forget it. Like, just for Bitcoin, wait until November at the very least, then see what happens in December. You know, there was some news today that Jim Cramer was selling all his Bitcoin positions. Jim Cramer says, I'm done with Bitcoin. I'm selling everything. Oh, well, yeah, that's bullish. That's a bullish signal. But is it the real bottom? Are we at the real bottom of Bitcoin? Or is there some bottom that's lurking, that a real flush that's lurking around the corner? And then with gold, like I said, it's probably not going to make some big move like late 2025 into 2026. It's not going to do something like that until maybe 2027, late 2027 into 2028. Maybe that's where we're going to see it. All right. So, yeah, I'm not excited with gold. I'm not excited at all. So, yeah, there you are with that one. Okay. So, he must be looking at options chain info and finding edge there. I need to look into it. I think they use a system where they're looking at data, okay, that's proprietary. If you're gonna look at the options chain, you get the put wall, call wall, you get the options chain. But if you're gonna sell a product that's more than just looking at public data, that's not enough, right? If you're going to charge people $300, $500, I'm assuming you have some secret sauce. So you can make AI do this for you. You can go look at free service like the bar charts I just showed you, which is free. Yeah, you can just easily find the open interest of the options, compute your own little chart and go like, this is the call wall, this is the put wall, blah 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 blah. But if you're using free information, I don't know. Let's see. There's a trader named Tom Snoff. I think he created Think or Swim and some other platforms, but he says he never even looks at charts, and I'm pretty sure he doesn't look at fundamentals either. I don't know if you got to find your own way, man. Find your own way. To me, charts is just a quick way to sort out the trash from the good stuff. I just don't have time to look at anything else. Some people just purely look at quantitative data. They trade purely on quantitative information. Like, if I know the VIX is going to go up, then I'm just going to short the VIX because the market always goes up. So every time the VIX goes in a certain direction up in a certain way, then I just short the VIX. That's the only trade I'll do. Then that's the only trade I do. People have their own ways to make money. There's so many ways to skin a cat in the stock market. So many different ways. You got to pick your poison. For me, it's just simply to buy things at the bottom and sell things at the top. That's generally how I do things. Very simple. Nothing else. I don't need to do anything else. That's okay. Constellation, not Centennial. Yep. Okay. If this is confusing, it's because it's supposed to be. Yep. If it's confusing, it is. I guess it's supposed to be. If you were to explain call wall stuff to a retard and what to look for in a chart, how would you sum it up? I think the thing about it is that the call wall and the put walls, these walls, they represent the most amount of call buying and put buying. And the market maker, the dealer, okay, so the casino, that's why they're called dealers, right? That's the casino. The people on the ground that are buying puts and calls have to buy it from somebody, and the dealer is the one that issues these options. And every time they create an option to sell to someone, they have to hedge. So if I'm giving you a call option, then I have to do the opposite direction of your play, right? I'm assuming you bought a call because you think it's going to go up. Then I'm going to have to short the SPX. So if you bought a call option for the SPX or the SPY, then I'm going to have to short the SPY or SPX, and I'm going to use futures to short it. So I am going to short the futures market. So that's what he was implying right there. That's what it means. If you bought a put, and then I'm doing the opposite direction. I'm buying the market. I'm buying the SPX futures. I'm buying the SPY options, or SPY underlying. I'm buying the shares underneath. So that's the only way I would say to explain it. The balancing act between the two forces, the people that are buying the options and the people that are selling the options, create the mechanism by which the market moves. So people like Jem Carson. So if you remember Jem Carson, I played his video, the Summer of George video. Jem Carson, the Turkish guy. So I think that's how you spell his name. CemKarsen. That dude right there. People like that believe that the market pretty much fundamentally moves on the mechanics of options flows. So they do not believe in anything about fundamentals at all. They believe that the whole market just runs on options, liquidity, option flows, option, I guess, esoteric behavior. I don't know how you describe it. It sounds like magic, pretty much, right? That's it. Like when you see a call wall line on a chart, what do they mean in layman's terms? Is it just a box that price is most likely to stay within? No, it's basically the price that you're going to get stuck in. The put wall is where you would have support. The call wall is where you have resistance. You already see that on the chart. If you look at a chart, you see the wall by itself. Every time you have support in price and resistance in price, Where do you think that comes from? So either you believe that that comes from magic, like people are buying and selling at that price just because they picked that price, I don't know, on a chart because it's a magic line, right? So a lot of people don't like technical analysis because they're like, oh, all you do is draw lines across a chart. So if I see a high, then that high is like important because why? Why is that high important? Just because you visited it before? No, actually, it's a representation of the underlying market itself. So whether you believe it's because of options or whether you believe it's because people buy and sell at that price and they have a disagreement and there's a lot of volume, like look at this one, right? Gold. Like you have a lot of volume going into the top of gold price right here at $5,600 before it crashed. So you know that 5,600 is significant because that was the last top. Do you just believe that it's just because there was a lot of people buying and selling at that price and then gave up, or because like look at the volume before the red bar. The volume at that area between 5,400 and 5,600, there was a lot of volume. It was the most volume since probably October of 2025. So were there a lot of people buying and selling at that price? They had a disagreement, and then finally the sellers won and the buyers lost and it went down? Or do you believe because there was a lot of people with option calls and option puts or whatever at that level and said like, that's it, we can't go anymore? I don't know. It doesn't matter to me. I really don't care about the explanation. All I care is that like it shows up on the chart. All these things, it's like technical analysis only cares about like what it shows you. I'm very uninterested about why it happens. So yesterday, we found out the reason why oil like reflects gold after a certain lag. So oil mimics gold after 19 months. That's what Tom McClellan figured out because he saw that was a pattern. He saw that was like something that kept on repeating over and over again. And he said, like, why don't I just use gold to predict oil prices then? Why do I bother with trying to do anything else to predict oil? Like people want to predict, oh, is there going to be a war? Is there going to be a global economy that goes up or down? Blah, 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 blah. People want to figure out the why something happens. But if you see a pattern, you're like, I see volume, I see a price, I see it go down, I see it go up. And then based on that, I can figure out what's going on. I don't really understand what's happening underneath it. I'm just making a story for myself to explain it. But that's what technical analysis gives you. That's all it does. And the cycle analysis, the same thing. It's like we see the cycles, we know there's a cycle, but we don't know why the cycle is there. Is it because of the moon, the sun, Neptune? What is it? Don't care. But yesterday, we found out that the theory goes that the liquidity cycle, which goes on 60-month intervals, 60 to 65 months, at the beginning of a liquidity cycle, gold goes up. And then at the end of a liquidity cycle, oil goes up. So in between the two, that creates a lag that happens. So what we saw in gold repeating itself around 20 months or whatever, halfway between or partially part of the way between a liquidity cycle, that I guess that kind of explains it. That's why it happens. So yeah, so another reason why this happens is like, okay, there's a call wall, there's a put wall. All right, fine, whatever. I don't care. But I think you can see that on the chart. The chart will show you these walls on their own. Yeah. So I don't think that really matters. I think what is interesting is that these guys assume that tomorrow there's going to be a big crash. Okay, so the Monday action is because of the options that expired last week. So the Friday, the weekly options, because you have to remember there's weekly, there's monthly, and then there's quarterly, right? So last week's options that expired caused the big rally we got today. And now that those options are now gone, then tomorrow it has to behave differently because now we're running off of different options, not last week's options. So that's kind of like, oh, okay, that's something the chart won't tell you, right? So is it going to happen tomorrow? Are we going to crash tomorrow? Let's see. If it crashes tomorrow, then I'm like, well, I guess it's a good thing that you know options, because looking at technical analysis will not tell you that. It will not tell you that. That's kind of the thing, right? So there you are. So that's why I give you all these little informations, because you're going to have to come up with your own strategy, how you deal with this. Either you ignore the options people and just go with the flow, just looking at charts, because most people will do that. Most people will ignore options. Like the Wyckoff guy in one of those Friday streams where he did Q&A, people were asking him about, oh, do you look at the yen? Do you look at the treasury yields? Do you look at options flows? And he said, nope. Because a lot of people, they don't want to get into analysis paralysis. So people have figured out as a trader, it's like, okay, I'm going to stick with what I know. I'm going to stick with a methodology that I think works. I'm not going to spend time trying to figure out everything. On my show, I give you everything too, right? I try to give you as much as I can, and you can dig deeper and try to learn into it, because I think the options stuff will become more influential as time goes on. More people are using options. We have ETF with built-in options. So people that don't even like to play with options, if they buy an ETF with covered call strategy, with income strategy, with a with like the protection hedging strategy, like the JPEHEQ, whatever strategy that they use, where they have like an iron condor or whatever the fuck it was called. Yeah, so if people are buying ETFs that have options built inside them, options are gonna come into play. They're really gonna come into play. So knowing these things probably will help you out. So maybe there will be a crash tomorrow, and it's like, oh wow, I guess I should learn options. Because if you just look at a chart, it won't tell you that. It won't tell you that at all. And so if you're gonna look at the next thing here, see, Clarity Act, the halving. Yeah, I know about that. Yeah, Clarity Act, whatever. Blah blah blah. Catalyst. Yada yada yada. Yeah, wind isn't, and the traders. Yeah, it's not gonna be. Yeah, it's not gonna be. Yep. So it's up to you. It's up to you how you want to describe it. I think I have some tweets that I might get into sometime this week where he gets into the VOMA and all that. But like I said, if tomorrow does go down, then those guys were right. It's because of the way the options were set up last week ahead of the big earnings, ahead of Kevin Warsh. So people were setting up all their option trades going into Friday to protect themselves from those two big events. Once those events wound down, then now you see the big release where the market pushes up after all those options expired. So even though there wasn't a big options expiration for the quarter, you saw that whole thing expire up. That's why we had the move today. So that means if tomorrow goes down, then you have the reason why it happened. I can't, if I looked at a chart right now, it wouldn't tell me the stock market was going to go down tomorrow. I don't think. I mean, maybe if I looked at the mark more carefully, maybe it would show me, but otherwise, nope. I don't think it would give me that reason. All right, let's get to the Chinese stocks. I wanted to get to the Chinese stocks there. So I got to open this up, and let's see. Let's get through the Chinese stocks. Let's review all the Chinese stocks today. So my favorite is Kingsoft, KC. That's my favorite. Okay, let's see. All right. Now, the last question was like, what is a call wall? What is it? Well, that if you even want to know what is it, then you can go to TradingView and go into options. Okay. So let's look at Core Z. Let's look at its options. Do you see this options? This is called the options chain. All right. So that's what Tropes was not Tropes, Kyle was talking about. So if you want to create your own call wall, then you look here and look at the open interest. What is the open interest? I think, is there an open interest on this piece of crap? Man, there's no open interest? What I only got volume. Volume's not open interest. Oh my God. They got Gamma, they got Vega, they got Delta. Oh, shit. I got volatility. Okay, I got this. I'm not interested in that. I think you need open interest to find the call wall. So I guess TradingView doesn't have this. Let me see. Let me see if this is right. How to compute call wall. How to compute the call wall. Yeah, you need open interest. So you need to calculate the gamma exposure. Gamma exposure is gamma times open interest times contract multiplier times spot price. So I don't even have open interest on this dang thing. What the hell? So volume is definitely not open interest. What the Oh my God. So this is worthless to me. I mean, implied volatility is not open interest. Oh man. Oh, what does a call wall tell you? It doesn't tell me anything. Call wall will show up in the chart. Like, for all I know, this is a call wall, right? This is a call wall. The call wall is whatever shows me up here. This is my call wall. This is a call wall, right? This is a call wall. Resistance is a call wall. I don't know. No, it doesn't show me anything. It doesn't tell me anything. Nothing. It just tells me nothing. I just showed you that video because I thought it was like, it gives you a reason why you see lines on the chart. Why does Core Z have a hard time going below $20.83, right? Every time it goes below there, it bounces back up, back above here. So if you look at a stock like Core Z, why does that happen? So options is a way to explain why. If we go back to like Wyckoff, when he was around, when Wyckoff was alive, there is, can you add options? I already looked at the settings. I didn't see any. Did you see any? I looked here. I clicked here and I'm going like, everything is clicked on. There's no open interest. This is worthless. So TradingView doesn't have open interest. It's worthless. I can't compute no call wall without that. So there you go. Why am I paying money for TradingView? So there you go, Kyle. TradingView has no open interest. There you go. Worthless, pointless. I don't give a shit about volume. So anyway, back to this discussion. It's like options gives you an explanation of why. It doesn't give me much as to an actionable action. It's like, oh, I have a resistance. I see that today we went below support right here, right? 20. So maybe I could say like this is a wall, this is a put wall. And then it has a hard time getting above 22.8 right now. So this is a call wall, right? But that just gives you an explanation of why. It just gives you an explanation of why. So that's it. That's all I said. I played that video because it was interesting that he said that you can break through a wall. You can break through a wall if there was a 30 delta spread. So there is information in options that you do not see in technical analysis, right? And it's like, what? A delta spread of 30, and if everyone buys back at that level, the market will push up higher. And I told you that the next step on the move up is 8,400. So if we can get through the resistance today, then we're going to go higher. Otherwise, we'll crash and burn tomorrow, I guess. So there's two options tomorrow. Tomorrow, when the new options come into play, we crash and burn and go back down, or we just break through this call wall tomorrow and somehow fly up to 8,400. Just like, you know, did you see the Kool-Aid commercial in the middle where like the Kool-Aid man just breaks through the wall and goes? So I'm just putting it out there that I don't know anything about options. I'm just saying that if you do learn options, there's something you can learn about it that will give you an advantage that this thing won't tell you. Like this thing doesn't tell you anything, right? What does this tell you? Nothing. So we got up here today at 7,858, which is near the high back in June 15th, which is also near the high that we had in June 1st. Wow, amazing. So technical analysis is useless. This doesn't tell me it's going to go down. This doesn't tell me it's going to go up. Once we hit this resistance, we just hit this resistance. That's it. I'm done with my trade. All I could say is like, I bought here, I sold here, I'm done with my trade. I move on, I go somewhere else. So that's all I know. So for actual call wall and put wall visualization on stocks, you'd want a dedicated option flow tool like Spot Gamma, Usual Whales. Yep. And that's why Unusual Whales is charging money, right? Unusual Whales has an API right now, and they're going to charge you money for it. I remember I saw $3,000, $1,000 a month. Yep, there you go. These guys don't give it to you for free. They make their bread and butter giving you this information. But I'm just saying, like, how much of this information actually gives you an edge, right? That's the problem. So if I bought all that data from Unusual Whales, it doesn't tell me shit. It just tells me, wow, there's a wall over here. There's a wall down here. But that's not much different from me just drawing a straight line from here. I just draw a straight line from June 1st. I have a line that goes 759. And if I just paid money to figure out a call wall would be what? Around 760. What's my benefit from paying all that money to Unusual Whales to generate me a call wall? Nothing. Absolutely nothing. So I'm assuming that VPS guy, that VPS Pro guy that I played the video of, he's going to tell you more things than just a simple call wall. A call wall isn't enough for me to pay money. The call wall is already there. I already see it on the chart. I didn't need to pay money to see a call wall. What the fuck? So this is pointless. That was pointless information. So at the end of that video, he was saying like, oh, wait a minute, but there's maybe if you have a delta like of 30 and then this and that. So if I looked at a delta, what the fuck? What the hell is a delta? I only know about gamma. So the call wall, I need gamma, I need open interest, and then I can figure out call wall. But now you introduce me another question. It's like, what the hell do I do with the delta? The delta, the vega, the voma. Okay, now you want me to pay money, don't you? To figure all that other extra stuff out. So Yeah, I just gave it to you because that was interesting, right? Let me see. Unusual whales. What does it charge you? Unusual whales. I think it's $50 a month for the basic. Usual whales API. Yeah, the Kafka API. So unusual whales is like about $50 a month. Let's see. And if you want something more than that, the Greeks, GEX, volatility, chain data, ETFs. Okay. Blah, blah, blah. $3,000 a month. Oh, $3,000 a month. There you are. Woo-hoo. Man, these guys are making money. I might as well just pay $100,000 a month to Donald Trump and get like an early edition of the of his tweets. Maybe that's more effective than wasting my time with this BS here with the options. Information is money. Information is money. So there you are here. So let me just show you this nonsense here. $3,000 a month, huh? Well, there you go. Fucking shit. God damn. Here you are. Get started. $3,000 a month. Here you are. This is what you get. Here's your quick start. So you can go to Python and just do this. Here's your Python code. And then you can just start loading up all this data and tell me if it's worth $3,000 a month. Tell me if this is worth 3,000. 5,000 to Hollywood Ben. Yeah, 5,000 to Hollywood Ben. Is that what he costs now? $5,000 for Hollywood Ben? How much edge do I get from putting money into the Thorpes? Oh, flow alerts, flow strike. Oh, options Greeks, GEX. Oh my god. This is crazy. I gotta pay 3,000 a month for this. It's hard for me to see what exactly I get from this, okay? I think that VPS guy at $300 a month sounds a lot more attractive. I might as well just pay him and see what's up and see if I get some actionable results from that. But again, I'm just too lazy to learn all these options nonsense. It's just like, bro, I just buy the dip and sell the rip. Like what else do I need to do? Does this give me more edge? How much more edge do I really need compared to that? I told you when to buy it last week, didn't I? So it's really hard for me to see how this is worth the money. And even if you did pay for it, again, you have to go to AI, make the code for you, generate the code, figure out this, and you're doing the same thing that millions of other people are already doing, right? Millions of people have already probably paid for this same service, and they're writing the same code because they're using the same AI. The same AI is generating the same code. All of you guys are doing the same thing, so you have no edge. All of you guys are doing the same exact thing. If everybody knows what to do, there's no more edge. Then what is the point? You have to do something that someone else isn't doing. That's what an edge is. So I feel like it's a waste of time to even attempt to understand these things at a certain level. The more complex, nuanced knowledge, that's harder to get. So yeah, Jem Carson. You can look at Jem Carson. You can find him. Let me see. Jem Carson. Okay, I misspelled his name. It's Karsan, not En. Okay. Okay. Go to his Twitter. Go to his YouTube channel. He has a YouTube channel. Okay, he has a YouTube channel too. Go over there and try to absorb his esoteric knowledge. If you can figure this dude out and you can you can use this data usefully, then fine. But if you're just going to be a monkey and just go like, find me the call wall, find me the put wall, it's like, that doesn't give you any edge. Fuck that shit. So let me see. Jem Carson. Yeah. So I played his video. He has a channel. Let me see if I can find his channel again. Let's see. Carson YouTube channel. Chicago. Yeah, I mean, Chicago is where the options exchange is, right? The commodities exchange, the options exchange. That's where the action is at. Yeah. So yeah, this is his YouTube channel right here, Kai Media. Go learn that. So if you want to waste your time with options, you need to understand this dude. If you can't understand this dude, forget it. Don't waste your time. Don't waste your time. Everything you try to figure out or somebody else already figured out. Would you say instead of historical resistance support line, it's giving you a map of real-time upcoming resistance support? I don't know. I don't think so. The only reason it would matter is if you make a new high, right? If you make a new high and you don't have history. So technical analysis requires you to have history. So something that happened in the past at the same price level. If you're making a new high or a new low that you never came before, then yeah, that might matter, because now you're like, oh, well, we never been to this price before, right? Like an IPO, you have SpaceX, you're going down, you're making a new low at the public market. I know the private market, we already been there, but in the public market, it's going to be different. So if you look at SpaceX, you're making a new low, you don't know what to do, right? There's no history at that price. Well, you know what? That's why you have the DeMark indicators. So DeMark made his indicators for that reason. So I feel like DeMark indicators, which cost now $900 a year, is a lot cheaper than me paying like $300 a month or $3,000 a month for all this options data. And even if I get this options data, I still don't know what the hell I'm doing. I think it's a lot easier for me to figure out DeMark's autistic 913 system than figuring out what the hell a gamma flow and Volma flow and blah blah blah. Dude, forget it. That's too much for me. I'm lazy. I don't want to learn this. This is a waste of my time. I'd rather do something that will get me the same results cheaper and more efficiently. So I try to avoid doing option stuff as much as I can for that reason. But if you're younger than me, you have more brain power, okay? So, and you have more energy. So I think it's important for you guys to know options. And that's why I bring it up and I show you these videos and I tell you where to go look for more information, because later on the options market will dominate the effective reasoning why the markets do what it does. And Jem Carson is probably the most important expert to look at right now. If you could figure this guy out, you're gonna be fine in the future. So let me see if I got like the whole Twitter thread. I have vol signals. Let me see. Vol signals. Blah 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 blah. Maybe it was this tweet here. Let me read this one. Maybe this one will be it. Yeah, CBOE, CME, correct. Chicago Mercantile Exchange, Chicago Board Options Exchange. Yeah. So yeah, Chicago is very important in the financial world. Very important. Very important. Okay, so all right, I see. He made this tweet. This wasn't what I was looking for, but all right, this is fine. This was like just before the COVID crash and during the COVID crash, and he was like, Look at the VIX. Okay, VIX is implied volatility, a 30-day implied volatility of the S&P 500. And I guess the green area was the monthly expiration of the VIX, and the red is the monthly expiration of the SPX. So usually the VIX is the Wednesday, the third Wednesday, and then the SPX would be the third Friday. That's where the expiration dates would be. And I guess he's trying to say like, oh, well, look at that. If you look at the way like the top of the S&P 500 going into 2020 from 2019, the exact top was just at the VIX expiration date. And then after that, we started crashing. Oh, we started crashing. All right. Oh, and then we got to the bottom, and the bottom was at the SPX expiration date, close to. All right. So the Friday, we had a little bit lower on the Monday after that. And then all of a sudden, we went back up, and that was the bottom. Oh, so the Monday after the Friday. So he's basically implying that these option dates matter. So on my show, I don't talk too much about options, right? Sometimes I go into detail, but I don't know what's going on. All I have to say is like the dates do matter. Even if you don't understand options, you need to know when you have big expiration dates on the options and the VIX. Okay? So the third Wednesday, VIX expiration. The third Friday of the month, SPX expiration. The third month, the third Friday, the third Wednesday of the third month, even more important than any other. So March, right? March is the third month of that year of COVID. So even though it was happening with COVID, that third month expiration, that quarterly expiration for the first quarter, that matters. That matters. Ken Griffin was a Chicago guy, but he got out. I think he splits time between NYC and Miami. Yeah, I heard he was a Chicago guy. So Jake Bernstein, another futures trader, also hung out in Chicago. A lot of people that were boomers who did the most trading, they traded in the pits. Okay, if you remember Trading Places, the movie where those guys were actually physically in the floor yelling the bid ask prices of the quotes for the orange concentrate futures, that was those were done. Most of those guys were doing it in the Chicago pits. All right, they were doing it in the Chicago pits. I know the movie takes place in New York, but it's probably a fantasy to say that most of the action happened in the New York Stock Exchange. No, if you traded commodities, it was in Chicago because Chicago was near the Midwest. So everybody that had to trade had to be like an agent for the farmers who were growing wheat, corn, soybeans, whatever. They hung out in Chicago. So Chicago was where it's at. I mean, Chicago nowadays probably has less and less influence compared to New York and San Francisco, LA. But Texas is trying to move in, right? Texas is trying to move in with the Texas Stock Exchange. But I think Chicago, yes, the Chicago still dominates, even though nowadays it's electronic. Okay, so that wasn't the Twitter thread I was looking for. Let's see. Maybe it was this one. I don't know. Let me see about this one. I think I'm gonna have to look at the old tweets of this guy. I think that's too old. So let's see. Let's see what post this guy did. Let's see what I gotta look at. No. Blah blah blah. Let's see. I don't want to pay money for that. What else? Okay, how about this? This one was interesting. I think this one was the one that I was thinking of. Everyone talks about gamma as if it's the only Greek that matters for the market. The real edge is often in other Greeks that are harder to cover, Greeks that persist across days, weeks, and months. that create feedback loops that move or reinforce already moving markets. Okay. VANA is the literal transmission mechanism that causes buying or selling of index futures when implied volatility reprices. So the VANA, that's the made up Greek letters, right? So the VANA, the VOMA, so they start making up letters here that don't exist in the Greek alphabet, and they call them Greeks. Whatever. I don't know why. If the market maker position is in between a say a strangle, it's muted. Drop the vol and deltas of calls and drops puts drop, but balance. But start throwing in customer hedging and overriding, and a strong condition emerges. Raise volatility, sell futures, drop volatility, buy futures. In this regime, we get sharp sell-offs, but they recover just as quickly and then flatline as the index approaches the long call position. That prior post captured the entire position's VANA. Proper analysis, private, involves normalizing, transforming, and breaking down the position into tenors in order to really understand what happens when vol moves. This is what underpins my track record on market analysis. Go just a little bit deeper and you get Volga, volatility gamma, Volga. Imagine the market maker predicament trying to run a flat Vega book. They're short Vega right now. Okay. That's just word salad to me. I didn't understand a damn thing you just said. So if you want to get into this, you have to be serious. You just can't be half-assing it. I think a lot of people that pay for all that data from unusual whales or whatever and go like $3,000 a month, I don't think they know what they're getting into. You have to really understand it. And this is just basic level. Like there's another level behind this level. And that's the Jem Carson level. So if you want to make real money understanding options, you can't half-ass it. And this is why I know that if I just go down this road, I'm just going to half-ass it because I'm just my eyes are glazing over. I'm like, dude, I'm freaking nearly 50 years old. I lost 10 IQ points already since I aged. I'm not as smart as I used to be. I don't want to do this no more. I might as well do engineering again because this is what it is. This is financial engineering, right? So I might as well just reread a textbook on quantum mechanics and essentially do this game. And I don't think it's worth it for a lot of people. This show is about basic stuff. The most basic thing you need to know is that there are dates where you have options expiration that matters. You have VIX expiration that matters. That's the basic level that you should know. After that, maybe you know about the gamma flip line. After that, maybe you need to know a little bit about the put wall, the call wall. But I think you can see that from the chart. So that's the basic level of understanding. From time to time, I might bring up videos that are interesting to listen to because they explain why something happens outside of the chart. The chart can't explain everything. And so tomorrow, if we see the market crash, then you know why. It's because that put wall or that call wall, I mean, was so important. And we didn't get enough delta to break through. So you didn't get enough delta juice. So you didn't get enough rocket fuel to break out of that wall. All right. So if you're going to ask me, what the hell are you talking about delta now? No, I can't explain it to you. Go learn on your own, I guess. I can't explain. So hopefully that covers it. So let's go and discuss the Chinese stocks finally. So that's what I wanted to talk about today. Chinese stocks. Chinese stocks. KC was up 9%. Does it have a call wall? I don't know. Fuck the call wall. I just like Chinese stocks right now. Let's look into it. Let's look into the Chinese stocks. Okay, this is the S&P 500, right? All right. This is the yield spread, right? We haven't seen any difference here, so nothing new here. So we can take away that. And then we have some Chinese stocks over here. Yes. Let's look at some Chinese stocks. Let's look at the weekly. So we're going to look at the weekly long term. Here's one stock that I mentioned yesterday. GoTo is a education stock for people that want tutoring. And we have another one that does the same thing. We have TAL, TAL. Same thing, same industry. This one is a bit different because it made its bottom in 2022, and then we've been going sideways probably around 2024. Now we had earnings already, 21%. Are we going to break out? Is this range going to be broken? So I could say this is the range we're seeing right here. This is what I'm looking at, okay? This is what I'm looking at. This is the important part. So we have GoTo has a nice little drop here. So this one doesn't have a range, but it did have a bad time. But we have, if we see, this was kind of like a area of support back in 2022 before we broke down and then recovered. That was during the time President Xi took power in China. So he became dictator. This was dictator time. So people were very bearish on Chinese stocks going into 2022. And then after he became dictator, it just went back up. So all the people that were selling into potentially bad news, they got out and people were buying. And you could see it's very good for trading. You went from $0.7 so 70 cents all the way up to $8. Very good, very nice. And now we're back here at $1.40. Okay, we hit that. Today we are at 192. Still early. If this thing is going back to $8, that's a quadruple bagger right there. EDU, another education stock here. We have a lower range, boop, right there. This one, you see this red bar? The top of this red bar is probably very significant, just as the bottom of this red bar here is significant. But we've been hanging around here, so maybe finally when we break 62, we can go up to 200. Okay, so this one is on watch. I have 3 trashy Chinese stocks for you to consider as a trade. Right there, 3 stocks: EDU, GOTU, and TAL. All right, here's my favorite stock to trade, though. Kingsoft Cloud. I love this guy. This is a great stock for me. So we touched $8. We're getting back into this range here. You see this? You could say like this whole area is a box. We broke down. We're getting back up here. Now let me look at the actual volume stuff. So we have some little red here. All right. We're turning green. We're turning this around. Very good. So this is the weekly. So I see if we went from really negative to positive again here. We're going in a negative area. Probably the good time to buy is whenever we're in negative area. So I'm going to draw this. If you see this area, this was a good time to buy before we rocketed up here, right? When we hit $2.21. So this range, we went below it, we went above it, and then we went below it. And then this last time we went below it was in 2024, September. That's when we went from $2 all the way up to $20. That's 10x. 10x right there. So KC is my favorite. So right now we are below 0 on this momentum line. So this is the APO percent oscillator at 1939, and we have APO at 39. This is a shorter term percent oscillator. We are now above 0 here. And I think this area, if this thing starts creeping back up and we get back to the top of the range, we probably will be able to break out. Let's see if we get it through earnings, though. We got to get earnings. We got to get through earnings for this one. Okay, so let's look at the overall Chinese ETF, KWEB. KWEB is the tech ETF. You can see like we touched the bottom here of the range. We got to get back up to the top. Let's see if this is the final run. It's been like this since 2022. It's 4 years of going sideways nowhere. Chinese stocks have been trash. But if this thing actually does somehow break out, we will have a good year going into next year. All right. FXI is the large cap. This has a broader suite of companies outside of technology. So this also includes the state-run companies, the state-owned companies. So it is in itself also going below this level and back above it. So I think this will look good too. If this thing can curl back up here, we can finally break out for reals this time. So FXI is up. Now we have 2 leverage ETFs. A CWEB is 2x leverage of KWEB. CWEB is 2x KWEB. And Yin is 3x FXI. So YINN, Yin. So there's also a Yang ETF, that's the bear ETF. So now we see this. Yeah, I think we're pretty good here. We're pretty solid on this one. So we're ready to go. Now, if we look down the list, we can see a lot of these little stocks here. I don't know which ones are important. I think you know about Pinduoduo. This one is the parent company of Temu. So Temu, the parent company is Pinduoduo PDD. You also have Alibaba. Okay, Alibaba. We have JD. We have Tencent. Now they all look pretty similar, right? All these stocks look in various stages, look pretty similar on the weekly chart. They've been going down this year, but now they're starting to improve. So this is a big change in behavior that we're seeing in Chinese stocks in the last several weeks. So I think it's time to be bullish. Bilibili. So this is the Chinese YouTube. All right, Bilibili, BILIIQ, I think is I don't know, Chinese Facebook. I don't know. There's all these Chinese variants of other things. Maybe it's Baidu is Chinese Google, right? Baidu is a Chinese Google. All right, BIDU. All right, we already covered KC. Now, this is the other one. This one had news that the Chinese government was blocking Hong Kong brokerages from allowing mainland Chinese to buy foreign stocks. This is probably the reason that we had problems with Korean stocks going into June. So this news was broke in May. So by the time June rolled around, I think there was less Chinese money going into Korean stocks to pump that bubble. So once that happened, we fell, all right, 33% on FUTU, FUTU. But now it looks like it's improving. TIGR is the other brokerage, Robinhood type stock, up fintech. TIGR kind of improving, so maybe it's time to buy these again. TME, so Tencent Music Entertainment Group. This is kind of like their Spotify in a way. I guess Tencent has their own music arm. Maybe IQ and TME are together in that sense, Spotifying it. Okay, we have YMM, Full Truck Alliance. This is Uber for truckers in China. So you can order a truck in China just like you would order an Uber on your app, and it will pick up goods and transport them to other parts of China. So YMM, yeah, that's let's see. This is $7 at one point, right? It was close to $7. $7.50 almost, and it's now $9.74. So let's see how that's going to go going forward here. BEKE. I don't remember what this one does. Who knows? Same similar shape. JOYY. Okay, this is a little bit better than most of the others. Okay, let me see what this one actually does. This one is a little bit different from the other ones. Engages in managing a communication social platform which enables users to join real-time online group activities. Online games, online dating. Okay, I see. Okay, this one has a really specific thing to it. NetEase is the Chinese gaming company. This one was IPO'd back in the .com era. So this is probably the longest U.S. listed Chinese company so far. All right. So NetEase, NTES, NetEase. All right. I have some of these other ones, but you can't trade them in the US, so I'm not going to talk about them. The last one is VIP Shop. I don't really know what this one does. Let me see. What does this one do? Holding company, which engages in the provision of online product sales and distribution services. I don't know. Cares. Okay, look at the chart. The chart is looking better, right? You got the nice crash in 2021. You've been going sideways since 2023. Okay, are you ready to break out? Let's see what's happens. Okay, so that's it. All right, we're done. Oh, hey, what's up, Ray? Wait, you're rating this thing? Oh man, I'm just talking about stocks right now. All right. Hey, what's up? Yeah, you've been bamboozled. You've definitely been bamboozled. No, I don't really look at chats. Let me see. So I'm gonna talk. Let me see what I gotta cover now. Yeah, I'm about to end it. It's too bad TK doesn't stream as much on Kick. He's trying to get back on Google. You need to raid King. Yeah, that's who you got to raid. This is serious business now. This is serious business because we're at the end times of the economy. So so I can't be goofing off talking about the boy. Actually, you guys should sub to Schizo Spud. Yeah, Schizo Spud. Let me see. But he doesn't multi-stream to Kick much anymore either. Shit. Man, all these guys don't really like. Yeah, these guys. Like the thing is, like Kick, like who the hell like streams stock stuff on Kick? Like I only see like a very few bunch of people, and I'm thinking now down with the crypto hasn't been popping off. There's not much people streaming that stuff too. Although I see some people trying to like show off their little day trading. They go like, "Ooh, look at that!" It's like looking at someone gambling, right, in real time. So yeah, Schizo Spud has most of the stuff for the Boyd things. So that's nice. We got Schizo Spud. Day traders are lame, but that gets the viewers. You just want basically people just want to see someone mess up and like blow up their account, and then start smashing their keyboard and yelling. Although I think a lot of those people are fake. Like the Korean streamers will do that. There's a lot of Korean streamers that will do the whole thing with like, yeah, they'll smash up their keyboards. That's real fun. But Schizo Spud is also on Kick. Let's see, Schizo Spud. He's gonna stream tonight. So let me see. I think it's just without the numbers. It's Schizo Spud. Yeah, you can get there. I mean, I don't know how that's real. Okay, like okay, tropes. Like I don't even know if that's like I think a lot of people just do that for the fun of it. They go like, "Oh, look at me crash and burn." Like they just throw in $1,000 or something like $100, right? And they just blow up their account on purpose, and then they just get like, a lot of views, and they farm the views. A lot of those people probably aren't even real. Come on, they're just like, what the fuck? You're just watching people gamble, and they're just making a show of it. Yeah. Yeah, most people just fuck off because it's confusing. Yeah. That's, you know what? I have like a clip of an old 8th grade textbook in America, and it taught people how to buy bonds, and it was like, what? Did people actually taught 8th graders how to buy bonds back in the 1910s or something? It's like, holy shit. Yeah, we are dumber, man. Like, there's people. We are dumber. We're getting dumber and dumber as time goes on. We're just getting dumber and dumber. It's just like, holy shit. Oh man, it was like 400, 700K. Wow, I don't know. Is that real? Are we certain that wasn't a paper account? Is that so what was a paper account, man? Shit. Drag us to Twitch. Twitch. Oh, is Twitch where the action's at? I heard TikTok is where all the action's at. TikTok. Let me see how much time I got. I was just gonna read one article, and that was it. That was my show. One more article. I was wrapping up with all these Chinese stocks here. Let me see how much time I got left. Yeah, I got some time left. A little bit of time. So I got one article to go. It was Skrelly. It was real. Wow. Wow, it was real. Shit. Damn. As a dumb person, it's like, don't worry, we're all dumb. We're all dumb now. Compared to your grandparents, yeah, we're probably like, we just look like morons. We're like, what? What? Oh shit. Yeah, thanks for the raid anyway. I wish I had something else. Man, I did have that video. So let me see if I can find that video. Oh, here we go. See, look at this kid. Look at this. Look at this. If this kid can do it, you can do it too. Come on. Here we are. Let me see if I can play it. Holy crap. Oh my god. I can't play a video right now. Dude. All right, hold up. I gotta fix this. Oh man, what is Restream doing today? Come on. This is what I get when I don't have OBS or whatever. This is this crap. All right, whatever. I'm gonna do this. Hold on. he lost 916,000. That's nothing to Skrelly. Skrelly has billions of dollars. Like the hell he cares. He's like, whatever. Woo. Skrelly does give good information though, so I do play some of his but he rambles on so much, like it's hard to find the nuggets. He just goes on and on and on and on and on. It's just like too much. Okay, I have to do this. Oh my god. Look at that. I'm duplicated. There we are. Hello. Okay, so let me see if I can play it now. I'm gonna play this video. I think this is funny. Kyle was the one that tweeted this to me. This was funny. This was really funny.
All right, guys, it's day 14 of day trading. Let's get it. So I learned a new strategy. It's called Bollinger Bands with RSI. So let me explain, right? So I think we actually might have a setup. When it goes below, let's see. So the line, that very bottom line is at like the 24. I don't know what the 24 number means. I don't know what it means. It just means market is going to shift up, I think. Also, it had one of the wicks has to close below the lower Bollinger Band. I think. I'm pretty sure. So let's put in a long position and let's see what happens. So we put our take profit at that high and the stop loss at that low. So this should be a pretty good setup. It's kind of just consolidating right now. I don't really know what's happening, but it is going up. Oh. We are about to hit take profit. We're so close. This is an immaculate trade setup. This is immaculate. This is fucking immaculate. Stop edging me. Yes. We hit take profit. That strategy was OP. I'm gonna keep using.
Oh yeah, keep using that. Let's see what happens. It worked that time. Does it work again? Woo! Yeah, I mean, yeah, there's no excuse, really. There's no excuse. Shit. But yeah, okay, so if you guys keep paying attention to my shows here, I have to get that Substack going, and it'll probably be easier to understand when the Substack gets going. Oh, maybe, I don't know, maybe not. We'll see. But yeah, there you are. There's no excuse. There is no excuse. Do 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 do. Okay, I guess. All right, it's gonna loop or some shit. Well, what the fuck? Ah! All right, get out of this. All right. Yeah, that kid's gonna be a villain. Yeah, maybe. Okay, I was gonna end the show with this thing. We're gonna read this boring article. All right, see you around, Westwee. See you around. Okay, so there's these 4 stocks that we have to look at the end. We have Band, you have Sound, you have Twilio, you have Ring, RNG. We talked about that last night. AI voice revolution, how Twilio, Bandwidth, Ring Central, and SoundHound are rebuilding enterprise communications. So I had a feeling Ring had good earnings last week. So Twilio, Bandwidth had bad earnings, right? Bad earnings. Ring had good earnings. I guess the reaction was good. And then we got Twilio and SoundHound. So these things are coming up next in our list. We're going to have to figure those out. I think Sound maybe next week. I don't know, something like that. The biggest infrastructure upgrade of our time is not happening inside massive data centers. It is happening inside the everyday business phone call. Cloud communications, artificial intelligence, and daily operations are merging. So I think this is where there's a lot of people that keep claiming that, man, there was this kick streamer who was saying like, dude, I called customer service and I rather talk to AI now. Like, talking to real people suck. They can't figure out what's going on. They can't get my problem solved. I'd rather just talk to AI. This is like the replacement of all those call centers, you know? So call centers are going away, and we're just going to replace them with all these chat bots that talk to you. Just like the self-checkout in your grocery store. This is what's happening. So cloud communications, AI, daily operations are merging. Many observers still treat this as a traditional telecom story, but the reality is much bigger. Twilio, Bandwidth, Ring Central, SoundHound AI are building the core plumbing for an automated economy. Voice is the primary medium. The financial opportunity is massive, and the underlying trend is arriving much faster than most realize. $79 billion voice AI market taking over enterprise operations. The numbers paint a clear picture. The global market for automated voice agents reached $7.63 billion in 2025 and is projected to hit $79.4 billion by 2034. That represents a 29.5% compound annual growth. Compound annual growth, CAGR. Some people call it CAGR. Gartner estimates conversational software will cut contract center labor costs by 80 billion in 2026. So if I think a lot of people had these type of jobs when they were growing up. It's kind of like, I need a job. All right, I just work at a call center. It's a soul-sucking job, but you got nice pay for just sitting in an office all day. Why not? Yeah, so that's probably gone now for most people in the future. So with the number of climbing to 240 billion by 2031, by 2026, 8 out of 10 businesses plan to integrate automated voice into their customer service departments. A software-driven voice interaction costs roughly 40 cents per call. Human agents cost $7 to $12 per call. Companies are moving aggressively to capture that 90 to 95% cost reduction. According to AI voice research, production deployments grew 340% year over year across more than 500 organizations in 2025. Total system usage increased 9 times over the same period. We are now watching pilot programs graduate to full-scale production across finance, healthcare, retail, and automotive sectors. Highly regulated fields like banking and hospital networks are just starting to connect. Infrastructure providers have a narrow window right now to secure their most lucrative long-term contracts. Oh, man. So we have all these different stocks to look at. I guess they're going to go through one by one, each one here. I don't know if I got time to talk about all of them. But yeah, Twilio, TWLO, Band, BAND, and RNG is Ring Central. Sound AI, SoundHound AI, SOUN. SOUN is a pretty crappy stock right now. So I don't know. It's hard to say. But like I said, software is going up. So even the crappiest of software companies might actually be the ones that will stand out in coming into next year. So who knows? There could be a very good change that's happening going into next year. Twilio leading the market in demand, velocity, and revenue growth. So I'll read a little bit about this for Twilio. CEO Korzema Shipchandler, interesting name there, shared a crucial detail. Now, I had Twilio years ago, but I don't remember if this guy was the CEO. Maybe they changed CEOs. Okay. Shared a crucial detail with investors on April 30th, 2026. Voice revenue jumped 20% year over year in the first quarter of 2026. He called it the highest growth rate for that specific product in 19 quarters. 5 years of steady acceleration essentially happened in 3 months. Total first quarter revenue reached $1.4 billion. That reflects a 20% reported increase and 16% organic growth, marking the fastest pace in years. Non-GAAP post-profit climbed to 16%. Management sequentially bumped up their 2026 guidance across revenue, operating income, and free cash flow. Chief Revenue Officer Thomas Wyatt noted a 29% increase in multi-product customers. Recent client wins include Sierra, Bland.ai, PGA of America, Golf, nice, Scorpion, KPN Netherlands, Televox, Stella AI. Scorpion built an automated assistant on Twilio that increased booking rates by 39% and brought in $8.4 million in incremental revenue. Twilio solves the widespread problem of context. Automated assistants often lose track of a conversation when a customer moves from an online chat to a phone call. Twilio promises persistent memory across all communication channels. Market researchers at IDC and Omdia both named Twilio a leader in communications platforms for 2026. Ooh. Interesting there. Okay. I'm liking this more and more. So, all right. I got to leave you guys. I think these 4 stocks look interesting to me. I mean, I was talked into Band. Band was mentioned. And then I said, Band sounds like Twilio. And then Ring last week had earnings. I said, Ring sounds like Twilio and Band. And then now I found this article and they're like Ring, Band, and Twilio. Well, they're also like SoundHound AI. Well, I played SoundHound AI before. I didn't really care about SoundHound AI fundamentally, but now I'm interested. If these 4 companies are kind of doing stuff that rotates around this whole AI voice call, voice chatbot type industry, and if this is where we're going to be, then I think we're going to buy these stocks going into next year. How about you guys? That's what I'm thinking. All right. I'll see you around. Thanks for the raid, Razor Red. Hopefully we'll see what King TL does. I want him to go to Sweden. I think Sweden would be very good. Oh, CrackStack. Any updates on CrackStack? So I'm going to try to start it up fairly soon right now. So I told you kind of like the blueprint. I have like the slow slow moving stuff, the boomer stuff for people that want to buy and hold 6 months at a time. And then I have one section just for the trading, right? For the extreme trading. And I'll probably have a little bit of overlap in between the two, probably. All right. Thanks, Razor. I'll see you around. Yep. So one day we need to get it. We need to get TK to do travel around the world. TK has barely left his little world in Fargo, North Dakota. I think when you see someone that goes traveling for the first time and sees new things, it's genuine reactions. That is priceless. That gets you real good IRL content. So if he does that and he needs someone to travel with him, I'll travel with him. I'll go with him. And then we just go around and see stuff. I mean, I'm too old though. Oh my God. I'm already hitting 50, man. I mean, I know you had your 40th birthday, Razor, but when you get close to 50, that's a different level. Shit really slows down. But yeah, enjoy your 40s though. If you took care of yourself, it looks like you did take care of yourself. So you're gonna have a very good 10 years. But 50s is gonna be a whole nother matter. Just don't be like Grace's dad, Ben Thorpe. Oh my God, he's just gonna be, yeah, you got 10 years, 10 good years. But you know, there's pretty good looking 50-year-olds. I mean, like shit. Fucking hell. Like nowadays, people know how to take care of themselves, unlike before. So you could probably get 20 years, no problem. You got it. All right. I'll see you around later.